Really the topic we want to talk about today is there going to be a housing crash? Prices, as we just kind of discussed a few minutes ago, they're going up. They're going up. The only thing keeping them from going up more quickly is the appraisals. And most properties are probably going for overlist and over appraisal. And there's an appraisal gap that oftentimes is being paid. It could depend on the price point. It could depend on the market where you guys are operating, but it's happening. It's happening a lot. Google had, did a lot of putting together some stats and some numbers and some research for having this conversation, because I've felt strongly for a long time that there's not going to be a crash there. And anybody that lived through what we lived through in 08, 2010, all the way through 2012, 2013, you can't help but be a little anxious about what we've seen. When we first opened up in Las Vegas in 03, which, having only been in Indianapolis prior to that, Las Vegas was absolutely the wild, wild west. Prices were literally going straight up. And if you've talked to me about this before, you've heard this story, but had a friend that bought a new home, took 11 months for the new home to be built. He paid $250, took 11 months. He closed it 1 week later after it was built, complete. He owned it for a week. He sold it after a week. He paid $250. He sold it 1 week later for $425. That's the good news. The bad news is then the bubble burst. Have a different friend who paid $300,000 for a new construction spec home. A couple years later, after the bubble had burst, that same floor plan, same neighborhood was going for $75,000. He paid $300,000. It was going for $75,000 as a foreclosure. Anybody that lived through that's going to be anxious about what's going on right now. And there's an opportunity actually with a lot of sellers out there right now that are absolutely in fear about prices crashing, and they actually maybe want to cash out. And that may be actually where we can pick up some listings, some people that are just nervous about what's going to happen. And hey, I'm going to cash out. I'm going to take my $150,000 or my $200,000 or whatever it is and go live with my parents, live with my kids. I don't know what they're going to do, but there are going to be some people that cash out because they fear the bubble bursting. Could it burst? Anything's possible. We'll talk about why I think it probably won't happen. This last month, just to show the panic that's kind of in people's mind, the Google search, when is the housing market going to crash, was up 2,450%. So, and you don't have to worry about all these numbers I'm going to be throwing out there. I will send all this to you in an email. So, just listen. I definitely want to talk about questions. There's different things happening in different parts of the country. Maybe we can all pull together and answer some of those questions. But according to Redfin, 42% of homes right now are being sold for over list. And that actually sounds low to me. To me, it seems like it's more than 42%. But, when you look at maybe some of the properties that are either highly overpriced or just maybe bad properties that really shouldn't sell to anybody ever, I can understand it. Another Google search that is happening right now is how much over asking price should I ask for how much over asking price should I go on a home in 2021? And that search in the last week is up 350%. So it's getting into the buyer's consciousness. I need to go over list. There's no inventory. They're all hearing the stories. But when you talk to people about, we just had an interview in here the other day. And I said, what's your take on the market right now? He's a new licensee. He hasn't been doing this. And he's like, oh, it's hot. I'm like, yeah, what's that mean to you? It is hot, but what does that even really mean? Most people don't understand it. What it really means is that we have no supply and that we have at least decent demand. Brad Inman wrote a piece a week or so ago where he likened it to having a pizza party. There's 20 people coming over for pizza and you ordered one pizza. There just isn't enough slices for everybody. And that's not changing anytime soon. In March of this year, the median sales price for closed homes was $353,000. That was up 17% year over year. The median price for new listed homes is $370,000. So sold $353,000, newly listed $370,000. That's up 15.6%. It's also the record for the highest median listing price. Median meaning 50% or above, 50% or below. To me, when all this boils down to simple supply and demand, we don't have the supply historically, I've been talking to people for probably 3 or 4 years and when they started saying it was hot. And what people never really understood was it wasn't that demand was all that hot. I'd say maybe in the last year or two, demand's really ramped up. We're going to talk about demand, but for me, it's been, there just hasn't been the homes. And so there's a bidding war. There's a frenzy going on for the few homes that are available, but it's been a supply issue. Well, here now that the supply is as worse it's ever been, and demand is actually spiking back to almost pre-meltdown levels. But again, demand hasn't been artificialized by easy lending. You don't have people that have literally no income, no assets, that are borrowing over 100% of loan to value. That's not happening. But what is happening? Well, let's talk about that. So why are housing supply, well, the question is, why aren't there really more listings right now? And there's been a whole bunch of reasons, but a few things maybe you thought of, a few things maybe you haven't. Back in 2009, 2010, we started seeing American Homes for Rent come into our market. BlackRock is a huge institutional purchaser of homes. And so I'd say for over the last decade, the smart money who came in and saw that the correction after the bubble burst in 2008 was an overcorrection, they started gobbling up inventory. Right now in 2021, 20% of all homes that are being sold to investors. Some huge institutional investors like BlackRock, American Homes for Rent, some just private mom and pops that are buying homes, flipping them, holding them, whatever they're doing. In some markets like Phoenix, 30% of homes being sold right now are being sold to investors. So for the last 10 years, investors have been gobbling up inventory. They haven't been divesting themselves of this inventory. Their assets doubled or tripled or quadrupled or whatever it's done. It's cash flow positive. Why would they let go of these things now? There's really no reason. And there's really no reason, because why are prices not going to keep going up? We'll keep talking about that. Some people locked into a low interest rate, maybe in the twos, and they're like, I'm locked in. My house payment's $300 less than it used to be. I'm just going to stay here, save some money. And that, with the pandemic, it just kind of, as, to put all this in the context of COVID, there was a question when COVID happened that we already had a supply shortage, a housing shortage at that time, but there was a question like, well, maybe this will ease up off demand enough that this might bring things into equilibrium. It didn't end up doing that. I'll never forget the stat I read in June of 2020 that 50% of home buyers had gotten on the sidelines for COVID, but 60% of home sellers were on the sideline. So in fact, it just ended up exacerbating a problem we already have. Now we're at DEFCON 1. Another huge factor as to why there aren't more homes being listed is seniors and older people aging in place, staying in the home. I mean, COVID, again, kept them locked down for the most part, even more than normal. But their health care is better. They're living longer. They're not going to live with their kids or into assisted living or even passing away at an age that they were before. So I think the average homeowner is, in the last decade, living in their home twice as long as they did 20 years ago. So a lot of that is older people. But that's another reason why those homes just haven't been coming on the market the way they used to. Here's a big one that a lot of people are forgetting about all of a sudden, even though it was a huge conversation last year. A bunch of people, because they couldn't do anything else in terms of moving and they knew they were going to work from home, they did a lot of updating and remodeling to the current home they have now. So they just did all that. Why move? I just paid 20 grand, 40 grand, whatever it was to update my home. Let's stay for a while. I mean, probably the biggest factor that's going into this is how the builders absolutely got destroyed when the Great Recession happened. And they were extremely gun shy to keep building. Banks weren't financing projects anyway, even if they wanted to. And so according to, trying to remember where I read the stat now, but they estimate that we've underbuilt by 3.8 million units in the last 10 years. You can't just make up for that. But why did they underbuild? Again, the banks were very gun shy in loaning them money to finance development projects. And even if they were, builders were gun shy to put their necks out on the line because they literally just got hammered. In the meantime, though, prices have escalated on land. Zoning has become more and more restrictive. It's hard to even get a project approved these days. So all those factor into why builders haven't been building. And another big factor that's really kept them tamped down in terms of their production is labor. A lot of migrant workers and other types that were in production, they left the industry and went into other jobs. The builders have had a heck of a time refilling those positions and finding reliable labor to build these homes. You might not know this, but 25% of the cost of a home goes into regulatory fees. And they've just been getting hammered on that too. So builders just haven't had a chance to catch up. They're trying to. They're having a hard time finding land where they can build a product that they feel like they can sell. At this point, it probably doesn't matter. They're going to sell almost anything. To me, one of the main solutions of pulling us out of this whole thing is multifamily production, which hopefully builders are going to be doing more and more because we need more units. We'll keep talking about why. Material costs. Another reason why the builders are not keeping up, the lumber mills. First off, 90% of our lumber comes from Canada. 80 to 90% are the different estimates that I see. And there were tariffs put on Canadian imports, supply chain issues because of COVID. The lumber mills cut back when COVID happened, thinking that production was not going to be near as strong as what it had been just due to the pandemic. Turns out they were wrong. Production needed to ramp up, not be toned back. So they've been having trouble keeping up. The average price of a new home being built costs $24,000 more in lumber right now than it did a year ago or before pandemic. So that's just the average home cost the builder $24,000 more to build just in lumber. Steel prices are up. Plastic resin is really scarce right now. Production was underproduced on that. That feeds into all kinds of things. If you've had to order appliances in the last year, hopefully you didn't need them overnight. It was going to take months to get them, literally months, sometimes 6-8 months just to get a fridge. So it's been hard to keep up as the demand has soared. Before we jump into that's kind of the supply issue. And again, all this is going to be coming into an email to you, but there's a whole host of reasons why there aren't homes available the way that we need them. Questions about the supply side, anybody? Marcy.
Any word, the burning question, any word on this being relieved and easing up anytime soon?
Building, the builders building more, or what? When you say relieved, that's a pretty broad question.
Well, for instance, I work a lot with new construction, and I sow my seeds, but I work primarily with D.R. Horton because they have more skin in the game. They have a little bit more funding allowed to them. So, I know that they've bought up a lot of stuff, and they kind of got ahead of the curve. The problem is they weren't able to really buy up the appliances. So there's still, the houses are at stage 9, but there's no windows, So any word on the street that this is going to kind of come together and
I don't, and maybe Kyle could speak to this, or someone that might have a little bit more insight with some of the builders, at least here locally. But what I will say is I feel pretty confident that supply chain issues, generally speaking, are going to, abate. How quickly that happens, I really don't know. And I think it varies by product, but yeah, it's happening. You can feel the world opening back up, but it's taking time. Kyle, you want to jump in?
Sure. I have heard from some of the local builders that the supply issues are easing up slightly. And once again, it depends on the product, but part of the reason the supplies got so tight was due to COVID, and they had to shut down some of their manufacturing and so forth with the pandemic. And that's what really started the initial supply chain issues. But I'm hearing that they're cranking back up due to the vaccine and so forth. So I do personally believe it's still going to take a while to wash that out. but probably by the end of the year, my guess is that we won't have the supply chain issues that we do right now. And I agree with what Marcy said. It's primarily windows and cabinets is what I'm seeing.
Well, the builders are going to work their butts off to try to help pull us out of this. And honestly, more production of homes is about the only way it's going to happen. That's kind of a sneak peek preview of my conclusion to all this, but it's really true. So the builders are going to probably be as aggressive as they possibly can, but wouldn't surprise me. Still, some are going to be reticent with what they went through a decade ago, but I don't know. We'll keep talking about that. On the demand side, where the heck did all these home buyers come from? They've been on the sidelines for a large part. Again, the market hasn't been hot because demand has been overwhelming. It's because supply has been so limited. It makes it seem like it's hot. But the overall sales volumes are just now starting to pick up to a level that was pre-Great Recession. And even then, it's not anywhere near at that level. It wasn't, again, artificialized by easy lending and by a push for everyone to not even own just one home, but multiple homes. So why is demand stronger than ever? One thing we've already talked about, but historically low interest rates.
Yes.
There we go. Historically low interest rates, of course, are fueling demand, and it's also probably fueling a little bit of urgency being created right now because there's every reason to expect that as the economy recovers, unemployment stabilizes, and people are out spending money and the GDP is going up, inflation's going to happen. It's just going to happen, whether it happens this year or next year, whatever it was. People are going to be freaking out when they have an interest rate in the 4s. And there's people right now that are really annoyed to find out that when they did their loan application and they were pre-approved at 2.875, that it's 3.25 or whatever it is. And that's already annoying people. So what happens when it gets to 4.5? It's going to happen. We have to be prepared for this. I don't know if it's going to get to 4 something this year or not, but rates are going to be going up at some point. With our demand, we all know how COVID really changed a whole bunch of things with this and how much the effect where people were moving out of the urban environment more into suburbs. People were moving from the coast over to flyover states like Indiana, where all of a sudden prices seem super affordable. Like, we're frustrated that this first time home buyer home went from $150 to $220 or whatever the price may be, but $220 for someone coming from New York or California, they thought it was a 1-bedroom studio. So it's all relative, and they're moving. And why can they move? They don't need to necessarily go to the office anymore. There's a whole bunch of people that are working from home these days and maybe going to work from home permanently. And do they have the right home to work from home? Where is their office? I read some statistic, several months ago that of the people working from home, there's X number of percent that are working in the 3rd bedroom. There's people that are working in, an office they already have, in the dining room, in the mudroom. 3% of people had set up their home office in their attic. So there's demand for people that need if they're going to not have to commute to work, they want something that's in an area they want to live in, or a house that at least is more accommodating for working from home. We've talked about it, but investors have been aggressively focusing and continue to focus on snapping up real estate. Have you been paying attention during COVID? Almost any kind of collectible or investment has gone through the roof and we talk about this K-shaped economy a K-shaped recovery where the haves that had money, had a home, had investments, they all saw their wealth increase, while maybe the less fortunate people that don't own homes, don't have as good of a job, or they could be in retail or food or hospitality, and those people got hammered. Just thinking about the dichotomy in the recovery for people, talking to my cousin's husband. His name's Adam. My cousin's name's Megan, but her husband, Adam, he works for a beverage distributor. 200 of the salespeople were in package, meaning they service liquor stores. 200 of the salespeople were in the restaurant business. You couldn't possibly have drawn up a more polar opposite opportunity. They work for the same company. One opportunity was generally looked at as about as well as the other. The people that were selling liquor to liquor stores had a record year. The 200 people that were selling to liquor stores had record years. The 200 people that worked for the restaurant were all furloughed and laid off. I mean, so just that's how different this kind of recovery is for people. And you can't forget that. But investing money for the people that had been building wealth during all this, they've been putting it into things like real estate because it's an inflation hedge, has better yields than treasuries. And they're just looking to pour their money, whether it's in baseball cards, real estate, whatever, art. All these things have been going through the roof. iBuyers. Many of you probably are in markets where we operate, where iBuyers are becoming quite normal. It's not that huge in Indy yet. We'll see how it goes, but they're getting back in, and they're all ramping back up, whether it's Zillow, Open Door, OfferPad. They're all starting to jump back in, and they really almost can't offer little enough. What I mean by that is the discounts that they're having to put in. They don't even practically need to discount right now to be able to buy a home and turn around. Is that going to end sometime soon where you can be that aggressive? Probably. But right now buying a home period is like hitting the lottery. One thing to keep in mind as to why demand is staying strong with buying a home is the fact that if you're trying to find a rental, that's almost just as hard. I mean, it might be harder right now. So this all comes down to there's not enough homes for people to live in. I'm jumping ahead here, but the biggest reason why this is all happening is because there's been an estimated, this is per Zillow, 5.7 million new households in the last decade that haven't actually formed a new household because they can't. They're living at home. They've got 3 different generations living together. They're living with friends. They don't know where to go because where the heck are you going to go? Rental prices are through the roof. A lot of these people too, they were hurt by COVID. They don't have the money. And so where do you go? You live at home, you buddy up with friends. You got, who knows what they're doing. You've got 30-year-olds moving back with their parents. You got parents moving in with their kids. There's not enough houses. So the millennials, the largest generation in U.S. history, bigger than the baby boomers, they went from not buying to buying or wanting to buy if they have money. And some of them do. They're getting money from their parents. They're getting money from wherever to buy a home because they're just now at the point of their generational spectrum that they're at that peak home buying age. And they went from really being very strongly kind of against buying because they wanted the freedom of not being tied down to, we're old enough now, we better start getting settled down. It's happening. We talked a little bit about it, but demand has not been artificialized by easy lending. And so one thing that's really tie this into why we're not going to have as many foreclosures as last time too. If I remember these numbers correctly, the pre-meltdown average borrower who was getting a mortgage loan, 31%, this is like in 06, 07, 31% of those had a 760 or higher credit score. In the third quarter of 2020, 71% of home borrowers had a 760 or higher credit score. So these aren't people that aren't paying their bills. These aren't people that are going to, outside of, of bad luck, some, real huge event happening in their life, they're not going to not pay their bills. Housing affordability, I love this statistic. Here's one why demand is also remaining very strong. In 06, housing affordability, which means what percentage of the population could afford a median priced home. In 06, it was 26%. rates were higher, incomes were lower, down payments were less. Today, even with how much prices have gone up in the last year, market affordability is at 61%. That's 26 in 06 to 61 in 2021. So demand's going to continue to stay strong because 61% of people can afford a median priced home. There just aren't any. So prices are going to keep going up because that's what happens when supply is a lot less than demand. Foreclosures. Why, if the market's going to crash, you would think there's going to be a ton of foreclosures. Pre-meltdown, 30% of homeowners were underwater, upside down. Today, 3% are. If I have equity in my home, I'm probably not going to foreclose. Back then, banks they're doing these 125% loan to values, no income, no asset verification. You didn't really have to have a pulse to get a loan. So of course, a lot of them are going to default. Not this time. Over 60% of homes today have at least 50% equity position. And the average family in 2020 has $194,000 in home equity if they own a mortgage, if they have a home with a mortgage. So these people aren't going to foreclose. They can sell their home at a huge, 20% under value and still walk away with a lot of money. A lot of talk about all the forbearances, the moratoriums on eviction and on foreclosure. And they're talking now about pushing that all the way through 2021, the whole year. There's huge political pressure to not let these people lose their homes. Banks, they went into the home ownership business a decade ago. They hated it. They have no appetite for REOs. So these forbearances, they're not balloon payments that happen when the moratorium's over. They're tacking them on the end of the loan. And so you can easily just keep making your payments whenever you get back up. Hopefully you're back up and running by 2021 for those types of people. Obviously employment's coming back. And you just have those payments tacked on the back. So those aren't going to foreclose. What's all this mean? Well, to me, the chances of us having an actual bubble that bursts are highly unlikely. All the reasons I talked about why we don't have any supply, and it's not coming online as quickly as we could hope, and all the reasons we talked about why demand is stronger than ever. The way I look at it is prices rise, as interest rates rise, things are going to slow down. And price acceleration and price appreciation is going to slow down. Sales volumes will probably slow down because housing affordability is becoming a problem. That's the household formation and housing affordability are the two key statistics that I think you really have to look at right now. As long as we can maintain a certain level of affordability, that's price, that's interest rate, and that's income, then the demand side is not going to crash. But on the supply side, the only way really out of this where we have sustainable, decent sales volumes and why affordability stays in check is if builders build more. $25,000 down payment assistance credit or tax credits to buy. Hey, I applaud the effort to try to help the less advantaged, because they are definitely going to be the ones that lose at all this. They aren't going to be able to afford a home. The issue I have is whether it's a tax credit or down payment assistance or whatever the case may be, it's helping demand. The problem is supply. So, I think we all need to be very supportive of anybody that's actually building a home right now, because that's the only way to keep the party going. We need more houses because there's more households forming. There's more people that need a house, and there just isn't enough homes. I haven't been paying attention to it, but I'm starting to a little bit. This is actually a problem that's going on almost virtually in every country right now. There's a handful of countries where housing inventory isn't a problem. Most countries it is. And that's pretty much the long and short I have of as to why we're not going to crash. Do prices slow down, sales slow down? Probably. But if we can get supply going and keep it going, we can keep this train on the tracks here. Questions on any of this? I know I've kind of rambled on here for who knows how many minutes, but Anybody have any thoughts or questions? Robin, you're over there lurking. What are you thinking?
Well, I loved all this, and a big reason for that, and I think we were talking about it a couple weeks ago, is, I mean, the statistic that you showed or talked about earlier in this, how many people are actually Googling, when is a bubble going to burst? That just shows us that that is on people's minds. We are dealing with our clients, and we have to be the educated ones to be able to speak to what is happening in the marketplace and be the calm in the storm, like you always say. So thank you for providing all this information so we can have that conversation. I do think there's a lot of agents out there who aren't educated in this and causing panic with their clients. And so we're dealing with that too on the other side. So the more educated we can be on this, the better.
Thank you for that. I will email. I pretty much was talking off of an email I wrote about this that I'll send out to everybody. If you want to forward to a client that you think might need to hear it, great, whatever you think. I pulled stats and thoughts from a myriad of places, but for the most part, I would say the conclusion, which isn't just my conclusion, but it is of my own based on supply and demand. I don't think we need to overthink this. There aren't enough homes for people that need them, period. Maybe we can get more. Marcy.
Sorry to keep chiming in.
Hey,
Robin and Steve, I'm gonna give you guys a clap and a pat in the back. Robin, I agree. If we're not educated, then we come across with like deer in the headlights and fear, and people can smell fear. We do not need any more fear that we have been subject to over this past year. Everyone needs a break. So be the calm. Take self-care, everyone. Be the calm. Thank you for that. Last question, and get out your crystal ball, Steve. So I know prices for new construction, again, that's my niche, tend to keep kind of ramping up a little bit. Any word, any pulse on it, kind of taking a deep breath?
Well, I think the best hope for relief on that is that the supply issues, slow down and abate, and that, I mean, lumber shouldn't be 300% higher than what it has been for a decade. And there's lots of reasons why that can come back and down into play. Same with steel, same with plastic. So, the builders are, how much they pass along that savings to the end client, who knows? Right now they're taking it and they're able to sell it pretty much virtually any price. Hopefully the price jumps, the price of increases slow down. I mean, right now builders are increasing prices every 4 homes they sell or something like that. Jeff, you're shaking your head over there. What are you seeing right now with builder price increases? I mean, obviously it's daily, but
I don't want to be negative Nelly here, but I mean, I've been in this over 20 years, started with builders, have plenty of friends that are in management with builders, and I don't see there's any possibility that they're going to back down on prices. Even, and I think this is a business decision for them right now. The builders that I know, they cannot even possibly react to the demand. I mean, and I'm thinking this is a 3, 5, 10-year problem as far as builders being able to get enough land, to get the trades, to get the materials, everything they need to develop a community. And another part of this, we hit on it a little bit, but I mean, I'll use, you kind of call me Mr. Westfield, but Westfield, Indiana has created the guidelines, the building guidelines that have driven the prices even higher. So unless municipalities start backing down on the requirements for the builders, I don't see any possibility that the prices are going to back up, because they're not. I just don't think that the municipalities, that the industry in general is even getting close to affordability anymore. It's being driven by demand. And I'm looking at Indiana. I don't know the other markets, but here locally, when people come in from other markets, we are still extremely affordable. Somebody comes in from Illinois, Chicago, if they're coming in from the coast, either coast, they're looking at being able to build a 2,500 square foot home for $500,000, and they're shocked because they just sold 800 square feet for $1 million. So having said that, why in the world would builders back down on their prices? I just think right now, if you're going to sell a house and build a house, do it now. Do both. Sell your house and build a home. The thought that you can wait on the sidelines in this market, to me, it's just, there's too much evidence against that these prices are ever going to retract.
I just pray to God that's not greed, you know? I mean, I get it, but I just pray to God it's not like, everyone just, they have dollar signs in their eyes, and I get it, but we got to think collectively too, because you're right, because anything spiked, it means that there's got to be a little bit of a coming down, so.
Well, I can tell you that the builders, after taking it on the chin for a decade, they're just looking for a chance to be a little greedy. And it's been a long time for them, and they feel like they finally, the people that had stuck around that didn't, how many builders went out of business 10 years ago? I don't even know, but the people that made it through, they're like singing hallelujah right now. Toby Smith had made a point here in the chat that, you know, it's maybe not good news if we're relying on the builders with the way they're cutting commissions. That's true in the short term and in the short run for sure. The builders building, though, in the bigger picture, isn't necessarily about our ability to sell more new homes. It's about more supply being available for the demand. And we need any and all supply we can get. I mean, if people want to turn their homes into a 3-unit apartment complex, that's the type of stuff. We just literally need more homes for the more households. So whether it's new, whether it's, you know, turning something into a duplex, I don't know what the how you do it, but it's really the only benefit to us, or the actual benefit, I guess, to us, I should be saying, of the builders building is just that there's an overall increase in supply and that we have something to sell. Because right now, going back to that pizza party analogy, we got 20 people over to eat pizza and there's one pizza pie right there. That's it. And so we need more pizza. Any other questions? Say that again.
Can I add to that?
Yeah.
Even though commissions are being cut and that stinks, I get it. New construction is such a great long-term play, especially right now. If we're, again, educated on the different builders, what they're offering, and we partner with them, when this goes back to somewhat normal and they need us again, because they will need us again, it's always a cycle. We become the shining star for them. We become the one they go to list their specs, they partner with, and feel good about when we bring clients in. Also, it's a great opportunity to spend 6 to 9 months with our clients and build a really deep relationship with them. So when they do go to sell and buy again, we're the ones they contact because we have that deeper relationship. So the commission is just one part of new construction. There's a really good advantage to bringing more and more buyers to new construction and being the expert and the professional in that, and then building deeper relationships.
Yeah, bravo, Robin. I mean, and it's kind of it's a philosophy. Is your business transactional or is it relationship driven? And if it's transactional, this could be tough. But even then, even if it's transactional, all you have to do is show, we talked about this morning during kind of just what we call the breakfast club, where agents get together. Show your value in this market. Okay, there's a perception that you just list your house and 43 people give you $70,000 more than your house is worth. That's a perception. Is that reality? Is that going to happen? Let clients know what they don't know. So if you've got experience in this market, you can add value. If you can add value, maybe the builder is shaving the commissions, but you're looking long-term. You may list and sell that house. You're developing a relationship, but also bridging that gap from the house somebody's in to the building process. just understanding that process should be worth something to the sellers. And just let them know on that buy end, you want to represent them, and you may be representing them for 1%, but that guidance is like Robin says, you're developing a relationship. And on the other side, also, there's a lot that happens from listing their house going all the way to moving in to the next house. And our experience in having dealt with that hundreds of times is extremely valuable to a client. And I do believe they will pay for that one way or another through referrals, through the relationship, or listing that current house. So I agree with Robin. It's tough. It's a tough pill to swallow. But number one, I think it's temporary. And number two, I really just think it depends on how we approach our business, short term or long term.
Hey, Jeff, it looks like Damien in Vegas has a question. Damien, you got your hand raised. Did you want to say something?
Hey, Steve.
Hey.
If, it can't keep going up and up and up forever. Somebody living in Barstow in a shack is going to be a multimillionaire. If and when it does slow down, what do you think may be the tipping point that starts it?
Well, there's definitely millionaires in San Francisco that bought a 2-bedroom home last decade and have seen those prices go through the roof. What do I think? I kind of spoke to this, but I think rates and prices will slow things to the point where demand is curbed, and when that happens, prices will stop going up because demand will be in equilibrium with supply. And that's really what's going to slow this down. And so my point is, the only way to keep sales volume sustained is to add more supply. Demand will eventually slow down because people aren't going to be able to afford a house. And that's going to vary by market. Vegas is going to be different than Indianapolis. Charleston's going to be different than Minneapolis. But that's the most likely scenario, is things just start to slow as prices keep going up, rates keep going up, and people don't have enough money or enough income to support buying a home that is one they would choose to live in. Problem is, where are they going to live? They don't have any place to rent either. So that's my best answer, Damien, is that things are just going to slow until people can't afford. And the only way it's just going to keep rolling is if we can build more homes, find more homes.
Sounds like a lot of homeless people.
I guess, or they're living with family or friends. But yeah, there's a lot of hidden households right now that are trying to figure out where they're going to go. I hope I answered your question, but that's all I got.
Yep. Thanks.
You bet. Any other questions out there? Jeff, you want to wrap it up?
Yeah. On a positive note, I think this is a great group of people, and I think the agents that are working through this and are living through this and sharpening their skills, we're always working on getting offers accepted. I don't think we're going to get into the point where we've got a 3 or 6 month supply, but I think we'll get to the point where you don't have to write 12 offers in order to secure a property. But the skills that we're developing right now, I think if you stick in this and keep working on your skills and just keep moving forward, when we come out of this, we're going to be extremely skilled in the industry, and that skill is going to be very, very valuable in the future when this does start to turn around a little bit. That's the positive that I want to put on this. The people that I know that are working in this business will probably, this last couple of years, maybe the last 4 years, the people that have stuck in this, I think, are probably going to be some of the best real estate agents in the industry, because they're going to have a skill level that very few agents, they're going to experience more in the first 3 or 4 years of their career than old dinosaurs like me have seen in 20 plus years. I mean, Steve, you've been in this over 20 years. What we've experienced in the last couple of years is unprecedented. And the fact that you're still in this and you're going to continue to be in this, take pride in that. When you come through this, you're going to be very valuable. So, I understand Robbins saying great conversation. Yeah, absolutely magnificent. And, it's not great news what we're experiencing, but it will go away. This is going to pass. We just don't know when.
Yeah, and to add to what you were saying, Jeff, if you can work on one skill right now, you need to be working on finding sellers. Whether it's to become a experienced, seasoned, well-respected listing agent, or it's just to find a seller that might sell your buyer a home. But the skill that's really needed right now is to find sellers. It requires some things that maybe you used to not do, like different types of marketing efforts, outreach on the phone, door knocking, but it's going to require some shoe leather probably and some elbow grease. But finding sellers is critical. Kim Loya had a question on here about appraisal gaps. Kim, did you have a specific question about the appraisal gaps?
Hey guys, no, I just was listening and I thought at the beginning, Jeff said that he was going to talk about the appraisal gaps and what's been happening. I didn't know if there was something you guys were going to say specifically about it.
Yeah, Steve, you had said that Brian Holly may want to touch on not so much the appraisal gap, but the appraisal contingency, perhaps.
Yeah, I'm not sure if Brian's on here, but let us get back together on that, Kim, and because there are some things we're working on with the appraisal gap question, but we'll save that for the next time. I mean, if you have a question about it, feel free to call any of us, Kim, or we're here to help. But we're working on some thoughts with appraisal gaps, and we'll be getting back with you on that.
Awesome. Yeah. Thanks, Steve. Any other questions? I know we're getting close to 11 o'clock, so let us know if you have any questions. Have a great week. Please reach out. Kyle and I are here. Steve, Chris, Brian Walker, the other Brian. We're all here, so reach out with any questions, any concerns. Let us know. Everybody have a great week, and we'll see you later.
Thanks for coming, guys.
Thanks.
Thank you.